So, Paul, it's all yours.
Well, I just logged on and I heard you say Paul. Well, I didn't hear anything else.
It's all yours.
You're not doing an opening?
I did my opening,
Wow.
but I know you're pressed for time, so I wanted to.
I'm okay. That's okay. I just walked in, and so if you want to talk for a minute, I can grab some water.
Okay, you could go grab some water. That'd be great.
Or do you want to talk?
I'll talk.
Okay, go.
Okay. So, I think the market is a bit overbought. I think we are due a rest. There we go. I think, or there's a Reno to, if you want to know how to get from Reno to Lake Tahoe, Paul just showed that. Um,
I'm trying to figure out how to get to the airport because we got 30 inches, supposed to get another 2 to 4 feet tonight.
so you're leaving tonight?
No, I'm supposed to fly out to LA tomorrow, but I don't know how I'm going to get to the airport.
Wow. 2 to 4 feet.
Yeah.
Holy mackerel. Yeah, Paul shot a man in Reno, actually, but. All right, it's all yours.
All right, hold on. I get some more. One sec.
I thought you were getting your water. Anyway, yeah, Paul is out west. He always wanted to be a cowboy. Yeah, he just said that. 30 inches, another 2 to 4 feet coming now. How are they with
It
how are they with
when we landed in the middle of the night Thursday night. It rained for I don't know 36 hours, 3 inches of rain before it turned to snow.
you can't ski on rain.
No, it was Friday sucked. We skied Friday afternoon. It sucked. We sat inside and didn't ski at all yesterday. It was torrential yesterday,
Poor
and
guy.
then it stormed overnight.
Boy, it sucks being you.
Shut up.
All right, all yours. Text me when you're done.
Okay. Okay, good Sunday evening. So I know that. Um, okay, so let's start. Let's move this down. Okay. So coming into last week, um, Bulls were in firm control. What I have said since the bottom was, any pullback's a buying opportunity, and if this trend is really strong, you usually only get a 2-day pullback in a really strong trend, initiation of a trend. And that's all we've gotten, which from my side is pretty good. I like that because I've been bullish, and I wasn't really interested in playing the market from the short side yet. So almost everywhere I posted, whether it's my blog or Facebook or Twitter, when I posted a bullish comment, I've gotten all these naysayers at why the market's going to stop right here and the rally's over. Um, Early on, I thought the Dow would target to 17.5 from the double bottom. I discussed that last week. I still think that. I think Tiny mentioned. Tiny, if he didn't mention, we're short-term overbought yet again. So let's see. Okay. So every time we've gotten short-term overbought, we have had a couple-day pullback. We've had 3 short-term pullbacks so far since the rally began, and we're short-term overbought again. If Friday had gapped up a lot on the employment number, I would have said that's a great selling opportunity. But Friday's action was really kind of muted at the open. We didn't close strongly. I just think we're probably getting a little on the tired side. Would I get short and do some wholesale selling? Absolutely not. I do not think the rally's over. There are so many studies that I've looked at in the thrust department, meaning advanced decline line stuff and up-down volume stuff. I mean, so this rally ranks historically in the historic category, not in how much we've rallied off the bottom, not in how much did we rally here, but in what the internals look like here. The internals have been overwhelmingly strong and powerful, and that usually means they don't fade right away. So that's my thinking. I think we could pull back a little bit. We could just stop going up and go sideways for a bit, and then we power higher. You know, I had said 17.5 by the end of the second quarter, and I said that down here. One of my buddies emailed me and said, "Dude, it's gonna be 17.5 by the end of the first quarter." Okay, if that happens, we'll take it one day at a time. So Friday's action, even though it was a little tired, you know, you still had almost 2-to-1 on the advanced decline line. That's pretty strong. 2-to-1, that's pretty good. You had gold reverse sharply. That's bullish for stocks. Let's see what else. Bonds reversed a little bit. Not so bullish for stocks. So let's go. Let's see if anything in the question window. It's just Scott. Yeah, Scott. I'm in. Where am I? I'm in Squaw Valley. So I'm like 45 minutes. No snow, no traffic to the Reno airport. But it's snowing really, really, really hard, and they're talking about big winds once again. So who knows? I'm getting out tomorrow. All right, so let's do our review. So here's a Dow. Again, the double bottom. I just so love it that the bears were just poo-pooing the rally. They poo-pooed it, and then when we closed above this key number, which I mentioned several times, when we close above here, it really squeezes the bears. And then you had a 2-day pullback right at that. That was a spot where a lot of people here and here got really bearish, and then we just exploded higher. So the Dow, we're a little tired. We have the 200-day, 100 and something points above. We have this gap, which I called at the time when we went down. This is the gap of recognition, where guys like me who were bullish said, "Oh no, this ain't good." This is where I'm like, "Oh boy," where I kind of knew I was wrong, and then deer in the headlights. A lot of people took action here. There's logical reasons why we should stop within a couple hundred points here in the Dow and pause and breathe. S&P 500, almost the same thing. Double bottom, above the key number, and now we're 200-day, just above. We have the gap of recognition above. So logical points to stop and pause, refresh and fill, kind of relax a little bit. Mid caps, which are stronger in that they've already filled their gap of recognition, but the 200-day just above, and previous to this, they were much weaker. So that's a good sign. Small caps, which I've owned, as you guys know, wrongly so during this decline, and then very, very rightly so, I added to that right at the bottom during this rally. So they've been the leaders, which I'm going to cover that in a minute. They're nowhere near the 200-day and nowhere near the gap of recognition. So they got some room to go. And the Qs look a little different. So the gap of recognition is way up here because remember, the Qs made yearly highs when nothing else did, and they didn't really have a double bottom. So they were weaker price-wise, and now last 3 days they've gone nowhere, the Qs. All right, so that's, and then let me just finish out with Europe and the emerging markets. Europe, I said last week, I still don't know what to do with it. It finally broke out to the upside, great, but it's still lagging, and I'm not really interested in Europe at all right now. Emerging markets I've talked about for a while, saying, here comes leadership, and they've just literally gone into orbit. I mean, they've just melted up the last 4 days. And that's something very new and different for the market. We haven't had that in a long time. And that's more of the commodity-based stuff. Something like a Brazil, if you will. Brazil, right up the side of the page, right at the 200 day. So I'd look to take a short in Brazil rather than go long. Tight stop right above. I think your risk reward certainly favors the downside in Brazil. It's a commodity-based country. The commodity index, why I mentioned commodities, has quietly had a nice little 10% rally. Now it's been decimated, but it's been a nice little rally in commodities. All right, so before I go on, I just want to go over some leadership. What's been leading? So first, let's go S&P or mid-caps. Well, look, since the rally began, the mid-caps have trounced the S&P. Trounced it. So mid-caps over S&P. And small caps really over the S&P since the low. S&P has just been decimated against the small caps. S&P against the Qs since the low, trailed but only a little bit, and now they look like they're outperforming. So on the surface, you have the Qs being the worst, then the S&P, and then either mid-cap or small cap. Let's take a look. So it's really, the leaders have been small caps, then mid caps, then the technology, then the NDX, then the S&P. Let me pause, look at questions. Kevin, oops. Do you think it's too late to add to my S&P? It depends on your time horizon, Kevin, but at least for my money, I would not add up here at 200. I'd wait for some kind of pullback. I mean, it's been a face-ripping rally. This has been unbelievable. So remember, it wasn't long ago, all dominated the media, that this is the bear market, blah, 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 oh my gosh, everyone's calling for Dow, what were they calling for, 14,750 or something, market's collapsing, new bear market, secular bear market, blah, blah, blah. Well, a funny thing happened. We put it in a beautiful double bottom, a little too short for my taste, but it was double bottom, and now we've ripped the faces off of the bears. And we're kind of right back to equilibrium. So for my money, I wouldn't jump on the S&P. Let me look at the Dow versus the S&P. So the Dow, stochastic-wise, is bottoming. When it comes time, let's see the Dow versus the mid-caps. So if we get a pullback, all right, I'm probably looking at the Dow first to own. Dow first, then the mid-caps. Let's look at mid-caps versus the Qs. Yeah, I'm probably going Dow first, mid-caps second, Qs third. But I want to see a pullback, Kevin. If I had cash, I'd want to wait. Hanson, Malaysia. So the problem with Malaysia is this was probably a tax on a capital gains distribution. It certainly looks. Let me try to pull it up in stock charts. Hold on. And I apologize, the internet where we are is uber slow. And it keeps going down, so if I lose you, I apologize. Okay, come on, Malaysia, come on, let's go. So here's Malaysia. Come on. It's like waiting for Godot. Holy jeez. All right, Hanson, here's Malaysia. Looks beautiful. However, it's really overbought in the short term. You've gone from 780 to 840 essentially. That's a pretty big move. What's at 8% in a week? So for my money, I would rather wait for a pullback. Yeah, Mike, I know the video lags the audio. I think it's two things. One, I'm on a slower internet here, and two, I'm on my my MacBook using Windows, and I always have issues with it. So I apologize. Johanna, what's your opinion that gold move higher, stock move higher, the dollar's not really falling? Does it mean that part of the trade? Well, Johanna, that's an awful lot of text in one question, so I'm trying to parse it out. And let me talk about gold shortly. So just hold that question. We'll get to gold in a second. Let's see. Jeff, is a new bull market in gold or just short-term rally? I'll get to gold in a second, but I still think that it's a short-term rally. And as I said, I think gold's going to 2,500 by 2020. And we're getting closer to that point where it launches. Do I feel it 100% we're going back to 1,000? No, but I would say it's more than 50-50 we go back to 1,000 first. All right, let me forge ahead. And while I've got stock charts up, let me pull up the AD line. AD line NYA. So again, for all of the naysayers of the rally, this is an unbelievable move in the AD line. I mean, that typically is not seen in the middle of a bear market. Because when you have these bear market rallies, price goes nuts, but you don't see a broad-based rally. This is phenomenal. I mean, you're back to the highest level since December in the AD line. That's pretty good. Let's see. And while we have this up, junk bonds, which I told you, which have been pretty good to me. I still own JNK. I can't believe this rally. When I bought it down here, I was like, oh my God, it's going to rally, then just collapse again, and I'll lose. But I'm really surprised at how strong junk bonds have been. And the plain vanilla, I mean, equally as good. This has been an unbelievable rally. And whether we just saw the bottom that I've been talking about for a while, that it was the major bottom that you close your eyes and buy for a year, I don't know. I don't have a strong conviction. I do own junk bonds in those portfolios at 100%, so I clearly think it's going to go higher. But I don't have a conviction yet whether we just saw the low I've been talking about. John, if T-bonds fall, will that hurt junk bonds? No. Junk bonds are more correlated to the S&P 500 than anything else. If junk bonds, if Treasury bonds fall, junk bonds probably rally even more. Excuse me. All right, let's go back. So let's cover the four key sectors. Semis. Three of them look the same. Semis, rip your face off rally. Look at this. Semis are above the 200-day moving average, and they're just about closing the gap. So they've gone from really lagging and looking awful to leading and looking pretty good. Let's see. Banks. Definitely a laggard play. I talked about it last week. Definitely a laggard play. They stunk. This is a nice little head and shoulders bottom in the banks. And I forgot who asked me, but JP Morgan was the one that I highlighted last week because I love this. It's a head and shoulders bottom, and you have an island reversal at the low. You get a double whammy. That one looked the best to me. The volume. And the volume is there to confirm. That was an easy one. Okay, so we got semis. All these sectors are certainly overbought, except for banks in the short term, but they still look pretty constructive. Discretionary, boom, right back to 200-day moving average, and they're just about in the gap. And finally, the trannies, which makes me the happiest because everybody was writing the trannies off back in here. This was going to be a bear flag, and trannies were going to collapse to new lows. I read about it day in and day out, but this period from mid-Jan to mid-Feb when the market went down, they didn't. That was certainly a period of outperformance and a warning sign the trend was changing. And you've got, what, 18% rally here, something like that? So they extended, yes. Overbought, yes. But it's a really good sign that the trannies stopped going down and started to lead before the market turned up. All four sectors look good on the intermediate term, overbought 3 out of 4 of them in the short term. Software, kind of like the Qs. They were the leader for, I don't know, 4 or 5 years. Now, I don't be the same way. They've stopped. The second decline was too great. I'm not really interested in software more. But telecom I've spoken about all year, and look at this rally. This is some rally in telecom. They're almost back to the November highs. This is really, really, really good for telecom. And I think it's because what you're seeing is a flight to dividend-paying stocks. Let's see. Diversified financials. Look similar to the banks. Retailers are really overbought. Holy jeez. Really overbought are the retailers. And home builders also huge. You're seeing some just enormous moves in the last month here. They almost all mirror the decline. So my friend Tom McClellan would say it's a mirror rally, and you should get a move right back to the previous peak, which on home builders is about 34 and change. Industrials. I've said it for many weeks that with a weaker dollar, the industrials get a bit of a tailwind, and that certainly has been the case. Look, they're above the 200-day and above the gap. So, just because the 200-day moving average is above overhead, doesn't mean that stocks are going to stop there. And I think that's a mistake a lot of people make. They go, oh, we've rallied in the 200-day, let's wait and see. Materials. Not as strong anymore as industrials, but still pretty good rally. I can make the same comment here as everything else. Very overbought in the short term, intermediate term, I still look okay. Energy really had a nice week, especially the drillers. That is some move for the drillers in the last 3 days, from 24 and change, a 10% move in 3 days for the drillers. So now I'm reading a lot of people talking about did energy bottom and we miss it? Well, we'll talk about that in a minute. That's a really nice rally in energy. Healthcare not so good. I wonder, is healthcare the next place that money's going to flow as a laggard play? Because they're only what are they? They're not even 10% off the low. So I don't know. Healthcare and biotech kind of stink. Will they get a bid? I'm not sure, but I don't really want to jump in here and say it's time to buy a biotech. We'll see how they behave. If they don't pull back when the market does, then I'll say probably yes. But if they pull back with the market or deeper, my answer would be no. And let's go to internet stocks, which I started peeling off this week. Another one. Oops. Just a beautiful beautiful 20% move. Friday's action looked a little tired. I sold some of my position on Friday, and I'll go buy something else, but can't argue with the moves. The airlines also, I mean, just back from the dead. This is one of the easier ones in that the February lows, you had just a beautiful bullish reversal here in the candles, and then you took off to the upside. Overbought short term, intermediate term looks okay. Defensive plays. Staples, which I think now is my biggest position. So I was worried about this bearish engulfing. I did not add on the pullback. And now this is an all-time high in Staples. All-time high in Staples. Your Procter & Gamble's, Clorox, Colgate, Walmart, Tootsie. I don't know if it's still public. All-time high in Staples, and finally, nope, not finally, REITs. Another great move in REITs. So Staples have yield, telecom has yield, REITs have yield, and for sure, utilities have yield. Beautiful reversal on Wednesday in the utilities, which I'm loving. Inner Circle members got a nice trade out of that. I think we still own it. Same thing with Staples. But in any case, utilities look like they want to go higher and probably hit all-time highs. Oops. So here's an all-time high in utilities up at, we'll call it 50, and we're at 47. So odds favor this rally running back towards the old highs. Gold, which I've done nothing with. It's been super overbought for a while. Nasty day on Friday, really nasty day on Friday, and big volume too, which is a good thing for equities that the gold stocks reversed. But that's a monster rally. All right, now I will pause and go to questions. Oops. Okay. Kevin, are most companies doing buybacks in February? Also, hedge funds buy too. Kevin, I'm not sure you mean by the hedge fund part, but buybacks have been a catalyst of this bull market. So the answer is yes, but nothing new. Okay, so Johanna, your question was, you have a hard time understanding why stocks and gold both go up together. I don't think they're mutually exclusive. They don't have to be mutually exclusive. Sometimes they correlate and they all go up together. Other times they invert. One goes up, one goes down. And I've said it for a long time. Ignore those idiots on TV that say just because gold goes up, the dollar has to go down. It doesn't. For short-term periods, gold and the dollar can move in the same direction. It doesn't have to both go up or both go down, all right? Kevin, do you see rotation from the FANGs and healthcare to gold and silver? No. I don't think gold and silver is pulling money away from healthcare. Although I see why you could conclude that, I just don't think they have anything to do with each other. What do you consider a pullback, force entry into bullish plays? Mentioned Perry. Well, Perry, to me, a pullback's right here, 2 to 3 days. And what does that equate to? 1 to 3, 1 to 4%. You shouldn't get a deep pullback, because if you do, that would, to me, call in question how strong the rally is. So we should only get mild pullbacks. Tom, why do I feel gold's going to 2,500 by 2020? So, Tom, I won't spend time on it tonight, but it's a call that I worked up I can't remember how many years ago, a long time, and it had to do with the amount of time gold went down for, and I thought it would be some kind of mirror move. So that equates to kind of like 2020, 2,500, and I want from memory, I want to say that that's the inflation adjusted high. Mike, we're gonna get to oil very, very shortly. And no, unfortunately, I think stocks are still correlated to oil, but not as strongly as they once were, which is good. But I think we're going to be hostage to oil. Kevin, even though gold rolled over, I see a lot of dojis and topping candles on many stocks. I don't think one has to do with the other, Kevin. Gold topping and stocks looking tired. I don't think 1 + 1 = 3 there. I think they're independent. But it's certainly more bullish to have gold trade poorly than trade well, if I have to generalize. But I see the same thing. A lot of stocks and a lot of ETFs look tired in the short term, and they should. It's been a phenomenal rally, just like on the way down, to the January low. Right at the low, a lot of stocks look tired from going down. All right, let's forge ahead. We covered junk bonds, TLT, sloppy but consolidating. So I guess it's not really. Come on, there we go. So here's gold. I'm sorry, gold TLT. They put in a little doji on Friday. I bought some TLT on Friday, and I'm guessing that if we close below Friday's low, I'll get out, which is a pretty close stop. But I think at a minimum we can get a rally to the upper trend line. What am I missing? Bonds. Let's go to the dollar. Here's the dollar. Nothing changed. I keep saying this every week. This day in December, this huge down day, changed everything. I'm still very bullish the dollar long term. But when this day happened, I said I'll be intermediate term neutral for a while. The dollar has to digest this big day. And I said it could take all year. So I don't think the dollar is ready to go up again. But I don't think it's ready to, I don't think it's put in its final peak. Currencies, FXE, the euro, it's oversold, but a reversal on Friday. I don't really have an opinion on this. Could go either way. No opinion. The yen has some of the most bullish sentiment. No, I'm wrong. The yen, the smart money has gotten very short the yen lately. So I think the yen is peaking and ready to go down and ultimately break below 78. Look at this amazing rally in the loonie. It's been really, really, really special. For a currency, this is phenomenal. And it's not just that it's correlated to oil. It's correlated to oil a little bit, not overly, not strongly, but this has been a really phenomenal move in the loonie. For Johan, the Aussie dollar, look at this. Aussie dollar, 3-day move, breaks out above all this. This is also kind of commodity related. But a nice move here. Shouldn't be done going up. Gold, the other currency. I think I pointed out last week, it had a really nice triangle. Let me look at GLD. Oops. You had a really nice triangle in gold, and it usually resolves itself in the direction of the trend, which is higher, and it did. Although Friday we saw a pretty significant reversal. So now the bears have a chance to make some headway on the downside in gold. Let's see if they can bring it back into this triangle or even fall out the bottom. And silver finally, after all this time, finally got a bid. It may only have been a one-day rally, but silver finally got a bid, for whatever that's worth. All right, let me stop and look at questions for a second. I'm getting tired. VIX support line. I'll pull up the VIX too. So here is the VIX. I don't see what was posted about some kind of reversal. I don't see any reversal in the VIX. It just looks like it's going down. I don't see anything on either side in the VIX. Maybe it's oversold in the short term and could get a little pop here. I could see that, but I don't see anything dramatic in the VIX. But I do remember the February lows, people saying stocks can't bottom because the VIX is only at whatever it was, 29 or 30. It should be at 40. And they're just rules like that are made, first of all, made to be broken, but they don't exist. Always never works in the markets. It is really snowing here. Holy jeez. There is no shot in getting out. Okay, let me see any other questions, and I'll forge ahead. March FOMC meeting. I don't think they're going to raise rates in March. They raise rates in March. I guess they could go back to talking about raising rates March, June, September, and December. I just don't think that's happening. As good as the jobs number was on Friday, and it was strong, wages went down. So jobs increase, wages go down. That's not a recipe for raising rates, I don't think anyway. So what do you think of the XIV? Is that one of those things that keeps falling over? Yes. No, Johanna. The XIV is not. The VXX is one of the broken ETFs. So the VXX, the longer you hold it, the worse you do. Same thing with UNG. You're right. And USO, the oil. It's not. I say they're broken. It's because when the underlying security trades in contango, and now half you guys fell asleep, but contango is when back months are higher priced than current months, and so that when the futures roll, they roll at higher prices. It's a problem. There's contango and backwardation. Backwardation usually happens near peaks in commodities, and that's when there's a short-term supply squeeze. All right, let's forge ahead. The XIV is the inverse via VIX, Johanna. It goes opposite the VIX. It's a better instrument to trade. It's the equivalent of being long the S&P 5 or 6 times leveraged. That's how it correlates. It's like on rocket fuel. And you can even leverage the VIX, which is insane. It's like trading the S&P 10 times leverage. Whew, I'm tired. All right, let's see. Let's go to crude oil. Here's crude. Again, is this the bottom? You guys know, I hate red candle at bottoms. They make it really difficult because there's no emotional reversal. But you can't argue you had a good double bottom here. We broke above the peak, and now we are following through. Is this the low? I honestly don't know. I do not have a strong opinion. Sorry. But I'll play the. So I don't have to know that. I do know you have a double bottom. We're above the intermediate term peak. Momentum's on the bull side, and I'd play it long until the momentum ran out. Natural gas, on the other hand, has fallen really hard. And I said last week, getting below this low, look for a reversal. We got a little reversal on Friday. So once again, if you were so inclined, you could play UNG to the long side. If it closes at a new low, you got to get out. Okay, close at a new low, got to get out. Copper. What a beautiful day on Friday. This also, sloppy head and shoulders bottom. Here's the neckline. Stock market bears love to talk about how copper's collapsed, which is indicative of global economic weakness. So what are they going to say now? The economy is recovering? I don't know. Wheat. Little hammer at the bottom in wheat, little follow through. You know, if you want to take wheat to the long side, I have no problem. Closes at a new low, you got to get out. But wheat looks like could get some upside here. Corn, staying in the trading range. I like wheat better right now. Beans, nice day on Friday. Most commodities had a nice day on Friday, but still in the context of this overall trading range, not really interested in playing it at all. Sugar. So sugar, which I really got bearish on and had an okay decline, has put in a double bottom. We had that huge limit up day, and now it's going right back probably towards the highs, where I think you can probably short it again. Cotton. Smart money is now long cotton, and in big size too. So you had a very emotional reversal day here, and then getting a little bit of follow through. So cotton's a long right now. Stop. Closed at a new low. Got to get out. Cocoa. Beautiful decline. Unusual kind of bottom. Very, I talked about it, very volatile. Huge up days and huge down days. Equilibrium reached, and now we are having a retracing rally in cocoa. Coffee. One day, I've been saying this for how many years? One day coffee's going to bottom, right? But at least for the last year and change, it just keeps going sideways with a slightly lower bias. I'm not ready to proclaim that we just saw the low and we're going up. Not yet. I think that's it. Whew. Let's see. Johanna, we did. Ladine, what do you make of Nat Gas making new lows and that stuff? Well, that's certainly something to keep an eye on, that you've got the stocks rallying ahead of the commodity. And again, I'd take a shot with natural gas on the long side. Close at a new low, you get out. But I think it's a valid point that they're rallying. Just like the oil stocks rallied, maybe they were the indication that right here at the low, and oil was down here. The oil stocks didn't come close to new lows. That was a sign. Okay, Johanna, hush is the word for copper. All right, no more talk about copper. Richard, what should the price of gas? What should be the price of gas compared to oil? BT, oh boy. Richard, I can honestly say I haven't a clue. The minute you put in that BTU equivalent qualifier, I don't know. That's way above my pay grade. Okay. Any other questions, comments, concerns? Did I miss anything? Questions, comments, concerns? You guys are really quiet tonight. I might do my all to give you it's the same place. Thanks, Mike. All right, so if nothing else, I got a good picture in today of the mountain. Johanna, I tried doing the meets. I spent a little time on them, and I tried pulling them up, but I don't like how they look on the e-signal charts, and rather than me just give a flip opinion, I said I wasn't going to cover them. All right, so God willing, I will get out of here tomorrow and fly to LA, and then I will be home, God willing, late Wednesday night, and be back with you guys next Sunday. And if we really get a lot of snow and wind, then I guess I'm staying put. So we'll see what happens. Thanks for your time coming tonight, and we shall speak with you next Sunday. Bye-bye.